Everyone is watching Nvidia. But if the AI chip boom explodes over the next few years, the real money will not be in Nvidia, and most investors don't even know this company exists. Stay with me, because this could be one of the most misunderstood AI stock stories of 2025. Artificial intelligence is no longer a future trend. It's already reshaping the global economy right now. Analysts expect the AI processor market to grow multiple times over this decade, driven by massive demand from cloud computing, automation, and large language models. And that growth is happening faster than almost any technology cycle we've ever seen. But here's the mistake most investors are making. They think this entire AI revolution comes down to one company, Nvidia. And while Nvidia is incredibly important, this is not a one-stock story. Quick note, if you value clear, no-hype breakdowns of US stocks and real market moves, consider subscribing. We focus on what actually matters for investors, and it helps us keep bringing you the latest opportunities. Now, let's talk about what's really going on. Nvidia dominates AI headlines for a reason. Its GPUs are the backbone of today's AI data centers, training large language models, generating images and video, running simulations. Nvidia hardware is everywhere. The company has built not just chips, but an entire ecosystem that developers rely on, and Nvidia isn't standing still. It continues to expand its software stack, networking solutions, and AI platforms to lock in customers even deeper. This is why so many analysts still see Nvidia as a core AI holding. But here's where the story changes. The biggest tech companies in the world, Google, Amazon, Microsoft, and Meta, don't want to rely on a single supplier forever. As AI workloads scale into the trillions of computations per day, cost and efficiency start to matter just as much as raw performance. That's why these companies are now building their own custom AI chips. Google has its TPUs, Amazon has Trainium, Microsoft and Meta are designing their own accelerators. This doesn't mean Nvidia is dead, far from it. It means the AI market is fragmenting and expanding at the same time. Instead of one winner, we're moving into a world where different chips handle different tasks. Nvidia still dominates flexible general-purpose AI. Custom chips handle specific high-volume workloads where efficiency matters most. And this is the key insight most investors miss. When the market expands like this, the biggest winners are often not the companies fighting in the spotlight, but the companies that quietly profit from everyone building at once. That's where the real opportunity is, because no matter whose chip runs the AI model, that chip still has to be manufactured, connected, powered, and cooled. And that brings us to the first quiet winner. Taiwan Semiconductor Manufacturing Company. TSMC is the company that actually makes the most advanced AI chips on Earth. Nvidia doesn't manufacture its own GPUs. Google doesn't build its own TPUs. Amazon doesn't fabricate Trainium chips. They all rely on TSMC. Every time a new AI chip design is approved, every time a data center expands, every time a cloud provider ramps capacity, TSMC gets paid. And as AI chips move to more advanced manufacturing nodes, TSMC's pricing power increases. This means TSMC benefits whether Nvidia wins, whether Google scales TPUs, or whether Amazon pushes Trainium harder. It's not betting on one chip, it's betting on the entire AI buildout. Now let's talk about the company most people completely overlook. Most investors think AI equals Nvidia. But one company quietly sits underneath nearly every large-scale AI system, making sure all those expensive chips can actually talk to each other. That company is Broadcom. Broadcom is not just a chip company. It is the networking backbone of modern data centers. As AI models grow larger and more complex, moving data efficiently between chips becomes just as important as compute power itself. Broadcom designs custom AI chips for some of the biggest tech companies in the world. These are the specialized accelerators that hyperscalers are building to reduce costs and optimize specific workloads. Recently, Broadcom projected around $8.2 billion in AI. Semiconductor revenue for the first quarter of 2026 alone, roughly double year over year. Even more impressive, its AI product backlog surged to approximately $73 billion scheduled for delivery. Over the next 18 months, this tells us something critical. While investors argue about Nvidia versus custom chips, Broadcom is winning on both sides. It supplies the networking silicon and custom designs that let all these systems scale. Broadcom is the duct tape holding the AI future together. And then there's a third layer almost nobody talks about: power and cooling. AI chips consume enormous amounts of electricity and generate massive heat. As data centers become denser, power efficiency and cooling infrastructure are no longer optional. They are limiting factors. This is where Vertiv comes in. Vertiv builds power management and cooling systems specifically designed for high-density AI data centers. Liquid cooling, modular power units, and infrastructure that allows existing facilities to handle extreme AI workloads. As AI expands, data centers don't just buy more chips. They upgrade power, cooling, and efficiency systems to keep everything running. Vertiv benefits directly from that upgrade cycle. And here's the big misunderstanding. Most people think the AI boom is about picking the single best chip company. In reality, it's a supply chain expansion across manufacturing, networking, and infrastructure. This isn't a winner-take-all market. It's a scale-driven market. AI spending is entering what analysts describe as a multi-year infrastructure cycle. Compute, memory, networking, storage, power, and cooling are all growing together. When that happens, companies that sit at the center of the ecosystem often outperform expectations. So how should an investor think about this? Instead of making one risky bet on which chip wins, you can position across the layers that benefit regardless of the outcome. A manufacturing backbone like TSMC, an infrastructure and networking leader like Broadcom, a power and cooling specialist like Vertiv, and yes, Nvidia can still play a role as the dominant compute platform. This approach isn't about hype. It's about exposure to the real flow of capital behind the AI revolution. Because whether Nvidia keeps winning, or custom chips take more share, or AI workloads explode faster than expected, the companies enabling scale are positioned to benefit. And that's where smart money often moves before the headlines catch up. If you want a deeper breakdown of any one of these stocks, including valuation, risks, and how investors might think about positioning, let me know in the comments which one you want next. Thanks for watching, and I'll see you in the next one.